Hello, everybody, and welcome. So we're now doing problem 1710. Only have a few more to go. It's exciting. So right over here, we've got during 2020, the following transactions took place. So the first thing they want us to do is to go through and record journal entries. So let's go through and help them out with that. So for our first one here on 3/1/20, okay, so we had Rogers Company paid a $2 per share dividend. I would be debiting cash because I'm holding the stock. So this is going to be, we're recording dividend revenue. Okay. So this here is going to be, I had 900 shares of Rogers at $2 each. So this is going to be 1,800. Okay. So I'm going to be crediting dividend revenue here. On 4/30/20, I sold 300 shares of Chance for $11 per share. So I'm getting cash over here, and this is going to be 300 times 11. And the cost of these shares to me for Chance Company was $9 each. So here, so this is going to be 300 times 9. So over here, because I need to balance with a credit, I'm going to have a gain of 600. Okay. That's my balancing. Okay. On May 15th, we purchased 100 shares more of Evers Company stock at $16 per share. So over here, we have equity investments. And this is going to be 100 times 16, or 1,600. And I'm paying cash for this for 1,600. Okay. So over here, that's on May 15th. My next one over here is going to be on December 31st, 2020. Okay, so that's what we've done over here. So now it tells us that the stocks have the following price per share values. Evers was 17, Rogers is 19, and Chance is 8. Okay. So what we're going to do here is we're going to look at what is our cost of all of these different stocks. So we've got Evers, we've got Rogers, and we've got Chance. Okay. So for Rogers, this is 900 shares at a cost over here of $20 per share. So my total cost over here is $18,000. Okay. Now for Chance, because I sold some of these stocks, what I'm trying to figure out first is what do I own as of December 31st, 2020? But for Chance, I had 500 shares and I sold 300 of them. So now I have 200 shares. My cost for these shares was 9. So here I've got a total cost of 1,800. Evers is going to be a little bit more complicated, but we should be able to figure this out. So over here for Evers, right? So Evers, we initially had 1,000 shares at 15. I bought another 100 shares at 16. So my total cost of these shares is I have 1,100 shares at 16,600, or over here for a total of a nice big round juicy number. Okay. So my total cost over here for Evers is going to be 16,600. I have 1,100 shares, and my cost per share is going to be or the average cost here is going to be roughly 15, and change. We got a never ending number. That's really not going to make a difference for us. So in terms of the cost of the shares on my books, I've got a total right now of 36,400. What I'm going to go through and do now is I want to look at my fair value per share. So over here, for my market price per share for each one of these over here. So for Evers, it is going to be 17, Rogers is 19, and Chance is 8. So the fair value is going to be the number of shares times the market price per share. Or right over here, this is going to be 1,100 times 17, 900 times 19, 200 at 8. So the fair value of these shares is 37,400. So in terms of when I look at what was on my books at the very beginning of the year, right, I had a fair value adjustment that was bringing down my total amount. What does that mean? It means it was a credit balance. So my equity securities, so my fair value over here was 7,500, right? It had a credit balance because it was reducing the cost of my equity securities. So when I look at this over here now, if I didn't make any kind of adjustment, right? So I would have over here 36,400. My existing balance is 7,500. And the problem is that doesn't get me to my fair value, right? So what I'm going to have to go through and do is I'm going to have to say, okay, what do I need this fair value to be? Well, the fair value, it's basically what I would be adding to my cost to get to 37,400 because the fair value is higher than my cost. So here, the fair value adjustment should be $1,000, okay? The reason is if I go and take a look at my stocks, or basically my equity securities, right now this has a value of 36,400. That's my cost. On my balance sheet, I have to reflect the fair value. So when I take this 36,400, and if I add this $1,000, I'm going to get to my fair value of 37,400. So therefore, my fair value adjustment is going to be $8,500. So I'm going to be debiting equity securities at fair value on December 31st, 2020. I'm going to credit unrealized holding gain, loss, income, which means I'm going to put it onto the income statement as another income / expense. Okay, so to record fair value adjustment. Okay, so let's kind of recap what happened in 2020. So I sold some shares over here. Actually, I got some dividend revenue that does not impact any of the carrying values of my shares. That only happens if we're doing the equity method of accounting, which we're not. Then over here, I sold some stock. And then over here, I purchased some shares. So in terms of my holdings at the end of the year, it's going to be the cost of my holdings is 36,400. The market price is 37,400. So the amount I need to reflect the fair value is going to be $1,000. I had a credit balance in there before of 7,500, so that means I needed to adjust it by 8,500. And we're only halfway through the problem. Isn't this wonderful? Okay, so right over here, Castleman Holdings sold the remaining shares of Chance for $8 per share. So we can just kind of keep on going down. So right over here. Okay. So right over here on 2/1/21, we received cash. The amount of cash we received was remaining shares of Chance. Basically, this is going to be 200 shares at $8 per share. Okay, my cost of the shares is going to be 200 shares times $9 per share. Okay, or 1,800. So similar to when we sell equipment, if I need a debit to balance, what is going to happen is I'm going to have a loss on sale of stock or of sale of securities. So loss on sale of securities or equity investments. And this is going to be here for 200. Okay. Over here on 3/1, Rogers Company paid a $2 per share dividend. So again, let's copy and paste because it's the same deal. Right, it's the same deal, 900 shares at $2 per share. Okay, so here's interesting. Okay, so on December 21st, this is going to be fun. So if a dividend is declared, right? So over here on 12/21, Evers declared a cash dividend of $3 per share to be paid in the next month. As a refresher, if I declare a dividend from the issuer side, I debit dividends, I credit dividends, payable. I debit dividends payable, and then I credit cash. So here, if I'm on the receiving end, I'm going to have dividends receivable, and I'm going to be I'll be crediting dividend revenue. Okay. The way I'm going to figure this out is I hold right now for Evers, I hold 1,100 shares times $3 per share dividend. So over here, this is going to be 1,100 times 3 or 3,300. Okay. All right. So that's kind of where we are. Okay. Now over here at December 31st, 2021, the stocks had the following price per share values. So what we're going to do here is we'll just go ahead and copy this and kind of help ourselves out a little bit. But over here for Evers, we had 1,100. Okay. We sold our chance investment. So what we're really left with over here is we've got Evers. We have 1,100 shares of Evers, and we have 900 shares of Rogers. So the market price per share of Evers is 19. The market price per share of Rogers is going to be 21. So when I multiply this through, I'm going to take 1,100 shares times 19, 900 shares times 21. So over here, my total cost, and I think I did this incorrectly. Hold on. Yeah, there we go. There was something that didn't carry down from earlier, so I apologize for that. So what I made a mistake on was, or what I didn't check my formula, is that over here, basically the shares, 1,100 shares at 1510 or 15.10909, total cost of 16.6. Rogers, total cost of 18,000. I sold the chance. So now what I'm looking at is my cost over here is 34.6. My fair value is 39,800. So if my equity securities are sitting over here, and that's actually wrong. This should actually be, oh wow, it's transposed. Okay, that is right. So my equity securities are 34,600. That's kind of dangerous. Okay. So the fair value. Okay, so right over here, my cost is 34.6. Basically over here, my fair value that I need to be showing on my balance sheet is 39,800. So my adjustment, or the balance, needs to be over here, a difference of 5,200. So my ending balance as of 12/31/20 becomes my beginning balance as of 1/1/21 of $1,000. So my ending balance here as of 12/31/21 needs to be 5,200. So my entry as of 12/31/21 is I'm going to be debiting equity securities at fair value for 4,200. When I debit equity securities fair value at 4,200, I record an unrealized holding gain or loss income of 4,200. And this is going to be to record fair value adjustment right over here. So that's what I'm going to be doing for this particular question right here. Okay. So this last one over here is that, prepare, it's basically asking you to prepare a partial balance sheet showing the investment related amounts to be reported at December 31st, 2020 and December 31st, 2021. Well, as of December 31st, 2020, you'd be showing fair value of equity securities of 37.4. As of December 31st, 2021, you'd be showing it at 39,800. The one thing that I didn't catch as I was going through this is you would also have a current asset in the form of a dividend receivable, as this should be paid within the next number of days. So I want to thank you for watching this video. and hope you enjoyed it as much as I did. And I look forward to seeing you on the next video. Have a great one.